Good evening, everyone, and welcome to the weekly review. Now, in this series, I'm just going to go over the trades that I took that week, and show you exactly why did I take them. So, first of all, we're going to start with CAD JPY. I took a short position on this pair. What was the reason for it? Now, last month we closed above this above this monthly zone. Now, there's two possibilities. The first possibility is that we go more towards the upside. The second possibility is that we retest this zone to go more towards the upside, or we get a fake out. So my main bias for CAD/JPY was short. Now, there's some things I do keep in mind. First of all, what can I see 2 months ago is that we closed bearish. So potentially the market could make some relief towards the downside, towards this zone. And then previous month, we did close bullish. We can see that the bears tried to push to the downside, and the bulls completely took over, and we closed this monthly high. So that's something to keep in mind. Then on the weekly, let's cut off previous week. Now on the weekly, what do we have? We have an inverse head and shoulder pattern. Sorry, we have a head and shoulder pattern. The weekly, yeah. And the price previous week tapped this weekly shoulder and then closed below the shoulder. So for me, I could go straight to the 4 hour and wait for a potential entry. Now, what's very important for me here is that I also mark out my weekly high as I'm trading against the GPYX. So I kind of want more confirmation on the weekly time frame. So the weekly high low. So I'm just waiting for the price to come towards this weekly high. Price came towards the weekly high, and we got an engulfing candle on the 4 hour. My plan tells me that I can look on the 2 hour for a potential reversal. And what can I see? Shoulder one, D head, and shoulder two. So I place my limit on the um, 4 hour box. There we go. I place my limit on the lower part of the shoulder, stop loss above the head, then one for the spreads. I think my ticks was 300. There we go. And this is the phase three trade. So I'm trading this towards the daily first structure. Then what happens? Price tapped this in and then boom, tapped this out, took a -1. Now, I've already reviewed this trade, and actually, I shouldn't have been taking this trade considering, yes, we're at our weekly high, but it's not really a proven supply and demand zone. It's not a proven zone that has lots of sellers in the past. So, actually, I shouldn't have taken this trade, but nonetheless, technical, a very good setup. Then, the next one is NZD US dollar. Again, we're going to start off on the monthly. And what can I see on the monthly? I could see an inverse head and shoulder pattern. I can see here the shoulder one. And we're currently reacting at this zone. We have here shoulder one, D head, and shoulder two with a monthly IC on a very strong buying region. So what do I see? What do I want to see on the weekly? I want to see a confirmation pattern. And what do we have here? We have 1, 2, 3, A, B, C. Now, normally I would wait for this zone to be tapped to look for potential entry. But what can I see when I draw my fib from the high to the low? I can see that our 61.80 zone, when I put my line on it, I could see that we have a very strong buying region. We have lots of buyers, 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 more buyers, buyers. So my price doesn't have to come back to the first structure. The price can come on this zone, react on this zone, and push more towards the upside. So as soon as my zone got tapped, I went to the 4 hour. I'm going to do the replay function so we can see exactly what happened. Boom, we're at our zone. I can go to the 4 hour, and what can I see? A pattern within a pattern. I can see shoulder one, D heads, 1, 2, 3. So I place my limit on the shoulder because the shoulder region here is the first region that can tap me in the trade. For our box, long position, stop loss under the head. I didn't round off my entry. 215, make it 220. Boom. And What can I see on the daily? The daily is against me, so I will trade until the daily first structure, which is here for me. Cool. What can I see on the 4 hour? Price tapped me in, pushed towards the upside, got very close to our TP, then reacted on this 4 hour bearish W, tried to push more again to the upside to our TP, and then came all the way back to break even. So good trade, break even, very close to the TP. But yeah, that's trading. And then the last setup that I took was Euro US dollar. Now let's start on the monthly. Gonna delete my drawings. What can I see on the monthly? A bullish M pattern. 1, 2, 3, 4. So I place my zone on the 100 level. I go towards the weekly. And what can I see on the weekly? Let's cut this one off. I can see 1, 2, 3. So I will mark out. In this case, there are multiple zones on which the price can react. First of all, we have the shoulder zone here, which we can see previous time got a strong push. We have our 100 level, and we also have our low. I will mark out my first zone that I'm interested in, which is here, weekly box. And let's see what happens. Price came towards this zone, took liquidity from the monthly zone. So I go to the 4 hour. And what can I see? Boom. First of all, I can see that the price had a small fight around this weekly zone. I could see tap, tap, and we broke above. So we have a reclaim of the zone. Then I place my limit on this 4 hour bullish M. It's a long position. Stop loss under the head because we have a bullish M without a break of structure. Round it off. This one for the spreads, 330. And I would trade this all the way until my daily first structure because the daily here is against us. So the first point at which I want to take profits out is my daily first, as this is a point where the bears can kick in, or when we're doing a bearish setup where the bulls can kick in. So daily first, potential of this trade was also 4.8. Now what happened? We had this bullish M. Now we have two candles that really indicates that the power of the bulls is kind of declining. So here, I was questioning whether I should still keep my limit, yes or no. But when I look at the monthly, we have a bullish M on the monthly. On the weekly, we have multiple zones. We have an IC, we have an inverse head and shoulder, we have your reaction on the lows, we have a bullish M on the 100 level. On the daily, I have a flat wall, so I have room enough to go towards the upside. So for me, it's a good to go trade, and I just let my limit be. What happens? We come impulsively to the zone. Here we tried to push above it again. My break-even point was almost tapped, very close, but not yet. And then the market pushed more towards the downside through my stop loss and a -1. Now, very interesting to see. What can we also see here is that the market went lower for some deeper liquidity. And here we have an inverse head and shoulder pattern with switch of momentum. So 3 trades, 3 good trades, good zones. Only CAD JPY was against my plan. It was more of an emotional decision to take it. I reviewed that setup. Not going to take it the next time, but NZD USD almost TP came back to break even, and Euro USD a very good trade from the higher time frames. But unfortunately, the market decided to, yeah, go a bit more towards the downside. So that was it, guys. I hope you enjoyed, and see you tomorrow for another Sunday market breakdown.